I'm just catching up quickly on the fundamentals that were released and the figures for the pound. Obviously, we have had some retail sales data come out today, which finally seems to have burst and popped the pound bubble. Why these figures and prices have been so overinflated for so long, I have no idea. But it seems like this is starting to pop, and as a result, obviously, we have seen some pretty sharp declines from the pound as this morning, throughout this morning. So, with that in mind, obviously, we're going to keep an eye out on a few things. Not just the pound, but also we are seeing some pretty poor news come out for the euro, which is probably going to give us a few entries also. I really like the fact that we've now made this lower high, and this lower low. So that is something that we will be looking to capitalise on throughout today. There is more data to come. Obviously, there's pound PMI at 9:30. Euro PMI data still. And then there's a dollar and CAD PMI and retail sales later this afternoon. So there's quite a lot to be very mindful of. So we will keep an eye out. Euro Yen is the place we are initially and first going to start today. Sip of my coffee. Euro Yen is where we're starting. Now, with Euro Yen, what we have seen is obviously a significant drive to the upside. This isn't particular to this pair. We have seen the yen act pretty weak. Obviously, we've seen the same with Aussie Yen also. We've seen quite a weak pair, and we have come back down, retested the area that we initially broke out from. So obviously these previous highs that we had managed to see that initial break from on Sunday night and Monday morning. Obviously that huge drive to the upside where we seem to have stalled. We did obviously take a short from 27.20 on Tuesday or Wednesday, 27.70 even. We're probably going to look to take a similar position this week also. As tempting as it is to get involved in a potential short as with what we're seeing at the moment, obviously in half an hour we are about to experience more euro data that is likely to have quite an impact on the market too. So it would be silly to get involved until that has been released. All we're seeing at the moment is just emotions from the data coming out. There is no way that we want to be involved in those types of moves. So what we are looking to do is break back below 27.70 again. Below 27.65 is where we're probably going to end up getting an entry. Now if we can do that, then what we would have seen is the breakout from this area, come back, retested, come back and retested. So we've now established some solid resistance at 128. What we'll now be waiting to do is obviously see that push back to the downside. If we come to the 4 hours, it looks as if we are making a lower high, which means that the next step is probably a breakthrough from 27.20 and that lower low. If obviously we still continue to get some weak pound data, euro data come out this morning with the PMI figures, then obviously I think this will be sped up. However, I'm just going to set, actually I think I've got a euro Just going to cancel the alerts that are no longer running. Just going to put in place an alert at 65 on Euro Yen so that we get informed when that does break. Obviously, if we pop back above 28, then that is no longer relevant. We can ignore short positions for the foreseeable future. I think if we break back above 128, then obviously a revisit of the highs at 128.40, 128.50 is pretty much guaranteed. But also, as we look to the left, around this zone, around this area, we're caught inside this range. So a retest and a push back to 129.30, 129.40, somewhere around that region would make a lot of sense if we do pop back above 128. So we're just caught inside of this much larger trading range that obviously we are currently sitting at range low. So a rejection from that range low, pushing towards with a decent confirmation from 127 would give us an entry potentially for that long. However, a breakback below 27.70, 27.65, that kind of area, anywhere between 70 and 60, we're probably going to get an entry, and that will be able to give us that short initially down to 27.20. From there, obviously, we'll look to add a second position and ride the rest of the wave down if that is so to be the case. Euro Oz, again, very weak euro data that has come out. That is going to play quite a significant part in what goes on, I think. However, we saw obviously quite a large push up yesterday. That has clearly slowed down. We saw momentum slow once we had ended up back around this 55.80 region. We're starting to see price continue back to the downside now. Now, obviously, it's imperative to get below these lows. Getting below 55 now is the most important thing. We've missed all this move, but there is very much still a chance for a pullback up. Into somewhere around this 55.60, 55.50 region, somewhere around these lows. We certainly have the opportunity to pull back up into this area to see a potential push back to the downside. However, as I say, really and truly, all we're looking for at the moment is that break below 155. That is what's going to signify to us that we are getting the move, that we are likely to see the short as the most logical option. If we again come out to the 4 hours, we can see that we've had a lovely lower swing form. So we've seen this lower high form on the 4 hours. We've rejected from that key area. And obviously we're seeing a break to the downside. What is imperative now, important as I said, is to break the lows. We need to get a close below these lows to signify that we have made a lower low. And now obviously the short swings, these N shapes in the market are set to continue. So until we see that, then we cannot put our confidence fully behind short positions. So we would need to wait for that confirmation, even if it comes on the 30-minute time frame. Dollar CAD. We've finally seen a break out of the neckline. I got caught in this yesterday. Ended up getting stopped on the spike into 27.20, which was very upsetting because we've almost immediately returned back down. We have now seen this lower high form on the 30-minute time frame, so that new set of swings is likely to occur now. Push back into around about 127 or 126.90 is quite likely, before obviously seeing a further push to the downside, unless of course we get through 26.60. If we break through 26.60 first, then the only way we can go is down from there before coming back to retest that area. What we've most importantly seen is the fact that all this consolidation and this little head and shoulders pattern that we were talking about yesterday has now been broken and taken out. That is left for dead. That is not coming back to this area now. We might pop up ever so slightly, pop inside like 5 pips just to get a retest of the area, but that area is gone. That is dead and buried unless something happens with the fundamentals later this afternoon. 4 potential entries, either a pop back to 126.90, maybe a little bit higher, but that rejection away will give us a short entry. 126.60 gives us a short entry back down to 26, and obviously above 127.20 will give us the longs, but we're not interested in that until this structure is taken out. Real simple, real easy. Aussie Yen, we've broken up, but again we're starting to reject the previous highs. That's likely to lead to a pushback down, and we cannot take a long position until 82.50 is taken out. 82.50 we know will lead us to 84.50. We've gone through this all week. We've failed to see any real movement. As I say, we have been sat in consolidation the whole time. That push up and that consolidation has just killed all momentum in the pair. With the yen gaining strength this morning or overnight, and obviously we did see some Australian fundamentals also. But with the yen gaining a little bit of strength, I wouldn't be surprised to see this consolidation continue for a little while longer. I think that pullback into 80.20, 81 to 82.20 makes a lot of sense. And then obviously probably a run at those highs, maybe possibly see the breakout from there. So we'll keep an eye on rejections away from 82.20, see if we can't take a potential position. At the end of the day, we are going to need quite a short stop loss, I would imagine. We're going to need loads, around 20 pips. So even at the highs there, we've got a 1-to-1. But obviously, for a run at 84.50 is going to give us quite a significant risk to reward ratio. It will take a long time to get there, but it's a position that we can just let run in the background once we have found it. Euro New Zealand, it is pretty clear that we do need to break below this support level. We've seen support coming at this level previously. 67 is where we need to end up. If we can get an entry around 67, then we pretty much will see quite a large drop down to 66.50, somewhere around this region, these previous lows, and then obviously into 66.30, and below that obviously we start to open the floodgates a little bit, and we'll end up at 64, somewhere around there. Got to contend with 65.50, but we are starting to see some signs that that might be possible. It all hinges around getting below 167. As I say, that is the important thing for us at this point in time. Like I said at the beginning, we've started to see this new swing form on the lower time frames, which is obviously very positive. We had this head and shoulders pattern form also, giving ourselves a neckline through here. We're not really interested in a neckline at 67.30 when we know that at 67.15 we have a much bigger level of support to get through. So any entries that come on the pair are going to be below 167. If obviously we see some positive Euro PMI, then the chances are that we will spike into 67.50. We will then see where the price, where momentum lies. we're going to have to give it around about an hour, I think, before we look to enter on any pairs, given the moves that we have seen this morning as a result of the fundamentals. But I think if we drive into 67.50, there is a chance we get an entry from there. Look for a fresh swing to be formed and then a run at the lows. I would be quite content to take an entry there if we can, because it would give us plenty to be risk-free with before we take that run at the lows at 67.10 there. If obviously we get back above, I don't think taking anything long until 168 goes makes a lot of sense at the moment. There doesn't seem to be anything. Obviously, we can get back involved in this previous range if we wanted to, above 67.50. But again, we will have to see how price is moving around that area, especially given the fact that we have started to see this new swing form. We've seen this price structure, this head and shoulder structure. So certainly the lower time frames are pointing us towards that potential breakout. It just hinges on the lower time frames here, this 67 region. But as you say, you can see how choppy the market has been, very consolidating with no real price movements. So yeah, we need to wait until we are below that level. Pound New Zealand, another one that has been a bit of a nightmare. We saw obviously quite a large push up yesterday. This was mostly as a result of Corona talks. And then obviously we saw some positive data yesterday morning come out, which obviously catalyzed and drove a push to the upside. That bubble seems to have burst this morning with obviously the retail sales data coming out. So a lot will hinge around the possible PMI figures. If obviously those PMI figures are weak, then we will pop below 92.75 and we will see a significant drop to the downside. I think we could be about to witness this pound bubble bursting. But a lot of the sustained downward movement and momentum is going to hinge around getting below the lows at 92.50 and then obviously clearing 92. If we clear 92, we will absolutely plummet back to 189. It's just going to be a waiting game when it comes to the pair, seeing whether or not those situations are going to occur. At the moment, obviously, it becomes quite clear that we cannot take longs until 194.20 is taken out. We obviously spoke about 194.30 yesterday as a potential area to drive into, which is what we have seen, and we've then seen a rejection away from. And we're starting to see those pushes back down, but we are failing to create the low. At the moment, what I would anticipate seeing is a drive back into 193.50 or somewhere around that area. That sharp push back up before either seeing obviously the push back to the upside or seeing that drive back to the downside with that fresh swing created. If this happens, we're going to keep a very, very close eye around this level, around these previous highs and these lows, just to see if we can gain an early confirmation or an early signal of where price may be heading. Gold is the last thing I want to touch on. We saw some significant pushes back to the downside yesterday. We were talking about these levels. You can see how just putting these levels in, gold respects them. It bounces between these levels quite often. It's just a case that you need to have some pretty big balls to carry it through. Big stop losses, but big targets. Surrounding gold at the minute, obviously what we've seen is a push back to the downside. What I would like to see really is that drive back up. We have seen a pretty large move down as the US dollar looks to have strengthened up. However, it's this momentum that we saw on Tuesday that is really starting to kind of put me off. What I'm almost expecting to see now is a potential pop back up to around about 118.08. Whether that's going to come into play this week, I don't know. It might wait till next, given the fact that we are in Friday now. We could well see just a load of consolidation. But anything above 117.84, obviously we look to take longs. And naturally, anything below 117.62, we'll probably have to look to turn our attentions to short positions. Let's see where to. For now, we can get rid of that level. Down to 117. Obviously, we find 117.40 in between all of that. Anything around that kind of area. But we have potentials. So if we just come out to the 30 minutes, then obviously what we will see is we have the potential to short from below the lows, take that back down for a 200 pip profit. Probably going to need about a 50 pip target stop loss, as we've said before. Or obviously if we see the break back above to the upside, then obviously we can look to take that position back up again around about 250 pip target for around about, probably necessary to have around about a 50 pip stop loss again. So we have potential options available to us. We just need to be patient. More importantly, we need to see that pop below 27.65 for Euro Yen shorts. Euro Oz shorts, we need to get below 155 for all the time that we are trading above these lows. Then longs have to be favoured. Dollar CAD, it looks like we're pretty clear of this region now. However, obviously the next entry can come for us at 26.60 or breaks back above 27.20, gives us the longs back to 27.80. Aussie Yen, rejections away from 82.15, 82.20 will give us the potential to take the long back up, looking for the break of the highs. Obviously, if we break the highs, then we need to turn attention to longs anyway. I do, however, just feel we're probably going to sit around consolidation. We might break back to 81.90, but we're just going to sit around this little 20-30 pip range. I can't see that this pair is particularly going to kick on for any reason whatsoever at the moment. I feel like we're very much range bound in it for a while now. Euro New Zealand, we've already spoken about getting below the lows at 67. Will see us clear of all this noise and put us on the path back down. Breaks back above 67.50 could lead to longs if we see proper rejections and confirmations. However, really and truly what we want to do is get above this 70 region and the previous highs. So it would be worth waiting until 168 is taken out to turn attentions to longs, unless you want to get involved now or moving up from 67.50. Pound New Zealand, again, that drive into 93.40, 93.50 makes a lot of sense. We should then see how price reacts from there. If we break back below 92.75 or 92.70, then obviously we will keep an eye on the potential for a short entry. However, I've been caught too many times this week jumping into this pair, so we will wait it out and see how things progress, I think. Can't really take longs until 94.20 is taken out. However, obviously what we can do is keep an eye around this region as to whether or not that is going to be the most likely scenario. I think breaks back above 93.60 are pretty much going to put us on the path to fresh highs. I think this area around about 93.50, 93.40, 93.30 it's going to be very, very key for where this pair goes next. Likewise, it is a break back below the lows. I think that will signify a drop. I can well imagine that we have a lot of sell orders sat around 92.50. Gold drop back below 1762 is going to put us back down to 1740. Longs back above 1784. I would then imagine, obviously we have this small area to contend with, but I don't think that's going to be too much of an issue. I think more than likely we are going to come back to 1809. So we have our options, we just need to wait for them to play out now. Whatever it is you're up to, obviously be safe, take care. I'll obviously draw attentions back to the PMI at 9:30, and obviously the CAD retail sales and US dollar PMI that is out at 1:30. Apart from that, I think we just need to let the technicals do their talking this morning. Whatever it is you're up to, as I say, have a good day, have a good weekend, and I'll catch up with you later.